Most Americans right now are beginning to see signs that stocks are going to drop and that we're due for a major recession. But for those that have any doubt, the Buffett Indicator is signaling that stocks are overvalued and due for a crash. Now, while the Nasdaq has seen remarkable gains exceeding 30% and the S&P 500 has close to a 20% increase, an ominous warning emerged from legendary investor Warren Buffett. His favorite market gauge, known as the Buffett Indicator, is flashing red signals suggesting that stocks are overvalued and a potential crash is looming. Now, this famous indicator takes the total market capitalization of all actively traded U.S. stocks and then divides that figure by the official estimate for quarterly GDP. Investors use it to compare the overall value of the stock market to the size of the national economy, and it just hit 171%, reflecting the exuberance of investors betting on AI, the anticipated rate cuts, and a soft landing scenario from the Fed. Buffett states that stocks are fairly valued around 100%, that they should be picked up anywhere between 70 to 80%, but that buying them around the 200% mark would be playing with fire. And Buffett sees this gauge as probably the single best measure of stock valuations, and his concerns are garnering attention. And he's certainly not alone, as many other financial experts are echoing his warning, and it's becoming crucial for Americans to safeguard their retirement funds. Now, there are several reasons why the market could crash. Stocks right now are experiencing overinflated valuations and are expensive on an overall basis. In fact, the only other time stocks have been this overpriced was right before the drops of 2020 and the dot-com bubble of the early 2000s. There are still forecasts of a major recession. While the Fed is still hoping for a soft landing, a recent Bloomberg survey found that 63% of economists are still expecting an economic downturn in the next 12 months. And money supply is shrinking right now, and since 1870, every single time that M2 money supply has fallen by 2% or more, a major economic downturn has followed, including a depression in 3 of those cases. As of now, the M2 money supply has dropped by over 4%, and so recession is surely on the way. And Buffett, again, is not alone in his predictions. John Hussman, who is president of Hussman Investment Trust and an asset bubble expert, thinks that the S&P risks a 64% collapse. He concludes that a steep plunge in stocks is necessary to get market conditions back to normal. And he summed up his prediction by saying, "Yes, this is a bubble in my view, and yes, I believe it will end in tears." And when it comes to protecting your financial future, being educated is key. Many Americans right now are riding the current stock wave, convinced that good times are here to stay, but many of the world's most preeminent investors are warning us otherwise. If you're concerned about the current state of the economy and you're looking for ways to protect your retirement accounts and your savings, I'm Mackay Block with American Hartford Gold. Give us a call today and we'll discuss how investing into physical precious metals can give you the protection that you're looking for.
Discover how gold can help you protect yourself and your family. Call today or visit our website for more information at AmericanHartfordGold.com.